celebrating 15 years of Young Turks.
Hello and welcome to this special edition of Young Turks, where we put the spotlight quite literally on India's angels. The Indian Angel Network was established in 2008 and since then has grown to become the world's largest angel investment group with over 400 investors investing in 10 countries. Over the years, IAN has been able to table a return on investment of 40%, and today they're announcing the launch of their maiden fund, the first for an angel network in the country. Pegged at a whopping 450 crores, the fund is looking to invest in 150 deals across sectors, geographies and stages. Joining us on the show today, the founder members of the Indian Angel Network, Saurabh Srivastava, serial entrepreneur and co-founder of NASSCOM, Chairman of NASSCOM, Raman, and IAN President Padmaja Ruparel. Appreciate you joining us here and congratulations on getting this done. Let me start by asking you, Saurabh, how easy or difficult was it to actually put this fund together? Because, you know, if you look at any of the data at this point in time, and I'm just looking at VC Circle, and they've put out their angel and seed investment data, fell both in volume and value terms, with deal volumes reduced to half, with 120 deals in Q1 of calendar year 2017. The picture didn't look particularly bright in 2016 either. In that context, how hard was it for you to do this?
You know, Shereen, not hard at all. We have seen no drops. 9,000 entrepreneurs see us every year. We're doing an investment every 12 days. We can't see how much faster can we travel. So we're seeing no drop. There is a drop in sentiment, for sure. Because when you have the large internet companies like Snapdeal and many of the others struggling, it spills down across the board. But see, at IAN, we're not restricted to one sector. We're in 17 sectors.
Yeah.
India has massive growth opportunities in lots of areas, not just in pure tech. And there's no dearth of entrepreneurs coming in at the seed level. So when we said we'll do the fund, the idea was we'll leverage what we've built as an IAN platform. We were doing 40 deals a month. Next 4 or 5 years, we'll do, I don't know, 150, 60 deals. And we're investing 3-4 crores in a deal. We said, why don't we do the fund? The fund will come and co-invest with IAN early on. They'll need more money.
Okay.
That's where money is getting scarce. So the fund will invest in the next round. It'll bring in other venture funds as partners to say, look, come and invest with us.
Okay.
So we won't compete, we'll collaborate. The company will need 3 crores in the initial angel round, 30 in the next, where we'll be there. It may need 60. But now we have other VC partners who are also there. So we extend the runway. And the beauty of it, and why we're so excited, is we're doing 450 crores. IAN fund in the next 4 years will do about 600. That's 1,000.
1,000, yeah.
Another 450 will bring in from the partners who will co-invest with us. 1,500 crores in 4 years. In a 10-year period, we'll do 3,000-4,000 crores. And really transform the ecosystem, because we would do not 15-20 companies like funds do. We'll do 150, 160 in 4 years.
Okay.
In 10 years, we would have done 500 companies, 40,000 crores. It'll transform the landscape. I mean, that's what's exciting us, to be honest.
What looks exciting today? If we're talking about the kind of irrational exuberance that took up the e-commerce companies and that now being cleansed out of the system, what looks exciting to you at this point?
See, there is that bit of exuberance that you speak about. But our basic strength is this 400 professionals who are sitting there, people who've been entrepreneurs before, people who built companies from nothing. And therefore they have the understanding, and it is across sectors, these 17 sectors that we speak about. So when an entrepreneur jumps into something, he or she understands that there is the need for some guidance, for some help. Mentorship, perhaps, a term that we can use. That is the strength of the Indian Angel Network. And with the fund, we are putting this strength, if I may call it, on steroids. Because
that's not necessarily a good thing, by the way.
Well, in terms of not giving steroids, but having it behave like on steroids.
I'm not sure that's entirely a good thing either.
Because for a startup to be able to get that capability, to get that market knowledge, to get that understanding.
But hasn't hasn't that been the problem, that the Indian startup ecosystem over the last few years has actually been on steroids, which has led to the problem that we're faced with today?
No, the steroids are devoid of knowledge. They are only steroids of money power. With this fund and with India Angel Network, we hope to bring in that gap in understanding, that gap of experience and expertise.
Okay, so Padmaja, the gap of experience and expertise is what you hope to fill, and of course, money goes with it. Over 10 years, a couple of thousand crores, as Saurabh has just pointed out. But what exactly are you going to be looking for through this fund now, and how is the investment strategy likely to be any different? The ticket size perhaps higher, you go anywhere between 6 crores to 25 crores, I'm given to understand. Take me through what the investment philosophy is going to be.
Yeah, we started IAN, the gap was the angel funding, the first 2 crores, 3 crores. That fortunately has moved. Angel investing has become center stage. You know, a lot of what you guys have done, this has become an established asset class in HNI portfolio. The new gap that we are seeing is that after they've raised their $500,000, they're not being able to raise their 1 to 4 million, which is where very good companies are falling off the cliff, or they're much slower in their growth rate than they could be.
So that's the gap.
That's the gap that the fund is trying to fill.
Okay.
And it's the pre-series A. And this is creating a very triple win strategy, if I may just take a minute on that. Number one, the companies that are performing, they are able to get, this is being done with co-investments. So here, as the fund goes and invests and says, okay, we'll invest 3 million, we would also invite sectoral VCs who are specialists to co-invest with us. So this creates for the company, for the fund, as well as for the strategic or VC fund, a very triple win strategy between themselves.
So just to take that triple win strategy forward, what's the kind of interest that you've seen coming in from the partner VCs that you hope to co-opt?
Huge, because in fact at the moment, almost all of our companies that have done well, we worked with one or the other of these leading VCs to work with them. So they're excited because they don't see us as competition. They see us in some ways at the epicenter. We're sort of growing all these hundreds of startups. We're able to make them sprout and come up to a point. And now when the time comes, it's deal flow for them. And if we are saying we'll make an investment, and we've been in that company from the beginning,
it gives them the confidence.
Well, because they'll come and do a 2 or 3 months due diligence. We've been there 18 months. So if we're willing to put our money and say to them, listen, come invest with us, and hey, you can determine the valuation, and we'll invest behind that. It gives them huge confidence. So it's working very well. And I just wanted to address one point which you said, the thing on steroids. The thing that happened, a lot of people got excited about being entrepreneurs, and that's actually a very good thing, because that wasn't the case 10 years ago. But a lot of entrepreneurs have tried to just mimic what is happening in the West. They've taken a model, tried to solve a model which for India is just addressing 0.5% of the population. In the US, it may have been addressing 50% of the population. So naturally, A, the market isn't the same, and B, they still want to value themselves the way they valued in the US, which isn't appropriate.
But whose fault is that? Let's not blame just the entrepreneurs.
Not the entrepreneurs.
Let's also blame the investing community.
No, this is completely the fault of the investing community. Because I think they should have guided, which is what we do. So they should have guided entrepreneurs to say, listen, if you're just going to do a model that somebody done in the US over here, and if you succeed, sooner or later, they'll come here. And if you have no innovation, nothing different, how will you fight? You're seeing that today. Snapdeal, Flipkart, and Amazon. Ola and Uber. But if you look at India, we have massive challenges and therefore massive opportunities.
Well, time for us to take a break, but when we return on this special Young Turks conversation, we'll take you through what the Indian Angel Network intends to spend its money on. That and more when we get back.
Celebrating 15 years of Young Turks.